Okay, everyone, welcome back to the show. Nice to have you with us. Hope your week is going good thus far. If you're new to the channel, it's a little bit of a different vibe. We talk about real estate and real estate related things, finance. Today we're going to talk about the future of the market, which I don't particularly enjoy talking about because it's just so complex that, let's be honest, most of us don't understand it, myself included. But it's a little bit of a different show, right? We have some bourbon together. This is more of a conversation. It's not meant to be like, a 3 minute like big sexy and here's my Lamborghini behind me that's rented, but don't tell anyone that. Like this is, it's me and a dog, and I don't know if you guys can see the dog right now, but he's very relaxed, very very relaxed right now. He'll probably pop up at some point in the video. And the bourbon today is we're taking a trip to Japan today, everyone, with a bourbon called Fukano. And my friend Jeff at RDR Gear turned me on to Fukano, and it's quite good. Japanese whiskey, very tasty. So anyway, let's talk about today's subject, which is kind of what everyone always wants to talk about. It like, is the market gonna crash? Hey, look, it's very chaotic right now. For those of you, I'm sure you know this if you're watching this, but if you don't, it's a very crazy real estate market right now, right? And it's very good time for sellers. It's not a bad time but it's a difficult time for buyers, right? Because it's so competitive that you're having a tough time getting offers accepted, but that doesn't necessarily mean that it's a bad time to buy, right? So that's what today's video is really on. Is this still a good time to buy? Is this thing gonna crash? And for those of you that kind of study this stuff a little bit, what's going on with Blackstone, right? Which sounds like something out of a Jason Bourne movie, so don't worry, we'll get to that. And actually, we're going to get to that right now, okay? So let me give you a little bit of background on this. So Blackstone is a giant, like, Wall Street investment firm, and I'm going to reference some notes as we go here, right? So they manage over $600 billion with a B. And they recently invested $6 billion into residential real estate, specifically buying residential properties and renting them out, okay? Now, for some of you, you're going, well, that right there just told me everything that I need to know. But let's go down the rabbit hole a little bit. Okay, so Blackstone post, and by the way, just so you guys understand, I'm not a technical, I have zero interest in trying to impress you guys with big words and stuff like that. There's plenty of other channels that can do that. My goal is to break it down and make it very simple for all of us to get, okay? So Blackstone post 2008 crisis, they bought a massive amount of residential real estate, literally tens of thousands of single family homes, and then they rented them out. In 2019, Blackstone had completely exited the market, right? So they stayed in it for about a decade, and they had a ton of rentals that they did. And then a decade later, they completely transitioned their way out. Then in 2020, they began investing again into single family homes. In 2020, about $240 million that they invested into single family residential real estate, okay? Now in 2021, they go big and they invest $6 billion. They specifically did that because they purchased a company called Home Partners of America, which they own about 17,000 houses that they rent out. I've never really studied their model, but essentially they have some sort of plan where you can rent a home with them with some sort of built-in purchase option, which is kind of like a lease assumption or like a lease option. You'll see it called not lease assumption. I think I'm talking about cars at this point, but like lease option, where essentially, hey, look, I own this home, right? And you can come rent it from me, and we'll have a pre-negotiated rate that says, hey, if you want to buy this house in 12 months, you can buy it, and some of the rents will have contributed to your, down payment or whatever it is, right? So essentially, it's a model roughly like that. I'm just giving you the broad strokes of it. So why does any of this matter? Well, it's a sign that Wall Street is confident that the residential real estate market is going to continue to stay hot. Smarter people than me have to answer investing questions and what's going on with stocks and the markets and Bitcoins and gold. Like, look, I fully concede, right? I'm not going to come on here and try to be something that I'm not. That is not my forte. That's not what I do, right? I'm a real estate agent that I help people buy and sell homes, and have a business that helps people do that in a lot of different areas as well. But look, when it comes to predicting the futures and markets and everything, that's not what I do, right? I go about my day-to-day business. But that sign of $6 billion invested into real estate, rental real estate, right? that's a sign that Wall Street thinks good things are going to continue to happen inside of the residential real estate market, right? And if you think about it a little bit, it shows that the rental market specifically has a lot of promise, right? Because if the prices of homes continue to rise at the kind of rates that we've seen, what's going to happen is that a lot of people are going to get priced out of the market. Where when they were looking at a house, first time buyer, they're looking at a house 12 months ago, and let's just say it was $300,000, and they're like, okay, I think I can work that out. I think I can, swing the mortgage for that. And now that house is $350 at the list price, but it also might go for $370, in terms of everyone bidding over ask, but you might have to cover that $20,000 on an appraisal addendum if it doesn't appraise for that. Don't worry, I know that was a little bit confusing if you're newer. We will go down that rabbit hole, just not right now. But you go, well, now I'm priced out because I can't go to 350 and I don't have that kind of cash to cover, going over listing price and things like that. So a lot of first-time buyers or just lower purchase price buyers could be priced out of the market. Well, what does that mean? Well, they still need a place to live, aka they're going to need to rent a place. So that's largely how I see it. What Wall Street's betting on is that, hey, the things are getting so crazy with prices going up that it's going to price a lot of people out. Therefore, they're going to need to rent. Therefore, well, I would like to own the thing that people are going to need to rent. Right? It's a pretty simple investment strategy if you think about it. And it's not just happening at Blackstone. This is a trend. This is happening with multiple big Wall Street institutional type investors. Again, I'm not a predictor of markets, right? But you should take this as a sign, okay? I don't have a lot more to contribute to the conversation on this, to keep it frank with you. I'm just looking at the data points and going, okay, cool. That tells me things that I want to know, right? Because I would say knowledge is power, but it's potential power, right? So, hey, look, take the Wall Street thing, Blackstone, all that kind of stuff. Hey, take it as a sign. It's a good indication that they believe, and they're a lot smarter than most of us, between me and you, right? They study this shit for a living. And if they're saying, look, we're going to invest into this because we believe it's going to continue to rise, pay attention to that. Those data points are important. So that's pretty much it today, guys. I will continue to, as a reporter of real estate things, I will continue to study this story, and I will bring you breaking updates as it happens, much like when a hurricane hits Miami every year and they bring you those hour-by-hour updates. We will do that regarding Wall Street investing into residential real estate. In the meantime, if you guys need anything, real estate questions are a good thing to put down in the comments of these videos. If you need legitimate inquiries, you can go to 1911syndicate.com. You can message us. Just keep in mind we're a small company, so we do in terms of kind of those of us in the company, we've got agents in a lot of different cities. But hey, we're a small company, so we'll get back to you. But pose your question and premise to us. Give us as much detail as possible. That really helps us out, okay? Versus 10 back and forth emails just to figure out oh, you're just out of your mind. So there's that. Subscribe to the channel while you're here. Drop us a comment, like the videos. If you share this kind of stuff, if you get value out of it, it helps us out. So anyway, cheers. Hope you guys are getting some enjoyment and education out of the channel. We'll see you soon.